Hello investors, welcome back to the channel. I'm Mitali Toke, here to simplify mutual fund investing and guide you on a smarter wealth creation journey. When we talk about high return mutual funds, most of you instantly think of small cap or mid cap funds. But what if I told you there's another category that's been quietly outperforming and turning heads? The thematic fund category has delivered remarkable returns. Out of the 32 schemes in the category, 20 schemes have registered a CAGR of over 20% on a rolling 5-year return basis. In this video, we are diving into 5 high-return thematic mutual funds that have delivered stellar performance in the last 5 years, and you might just be missing out on them. Thematic funds are equity mutual funds that invest in stocks belonging to specific themes such as consumption, public sector undertakings, manufacturing, and the ESG theme known as environmental, social and governance, and the overseas theme, etc. They are mandated to invest in at least 80% of their assets in stocks of companies within the chosen theme. For instance, a consumption-themed mutual fund will invest predominantly in companies engaged in producing goods and services for direct consumption such as Titan, ITC, Trent, Nestle India, Jubilant Foodworks, etc. Let's have a look at the 5 high-return thematic mutual funds selected based on 5-year rolling returns. First is the ICIC Prudential Commodities Fund. It invests predominantly in companies engaged in commodity and related sectors. It uses a blend of growth and value style of investing to select stocks for the portfolio. The fund was launched in October 2019 and currently has an AUM of Rs 26.2 billion. On a rolling 5-year returns, the fund has delivered a CAGR of 35.2%. The fund's top stock exposure includes Jindal Steel and Power at 9%, JSW Steel at 8.2% and Ambuja Cements at 7.6%. Sector-wise, the fund's portfolio is dominated by iron and steel at 32.2%, chemicals at 28.2% and construction materials at 20.3%. Second is Aditya Birla Sun Life PSU Equity Fund. It aims to benefit from the growth potential of PSUs. These companies are considered relatively safe and are backed by the government. The fund was launched in December 2019 and currently has an AUM of Rs 53.9 billion. It follows the bottom-up approach to pick up stocks which take into account the fundamentals such as growth potential, stability, valuations, return metrics, financial strength, etc. In the last 5 years, the fund has delivered a CAGR of 31.1% on a rolling basis. The fund's top picks are SBI at 13%, NTPC at 8.7% and Power Grid Corporation of India at 8.2%. In terms of sectors, the fund has shown a preference for banks at 21.4%, power at 17.7% and crude oil at 15.2%. Third is the Invesco India PSU Equity Fund, which invests in companies where the central and state government has majority shareholdings or management control or has the power to appoint a majority of directors. The fund was incepted in November 2009 and has an AUM of Rs 12.8 billion. It follows the bottom-up approach to pick PSU stocks with a keen focus on funds with high growth potential and return on equity. The fund's 5-year rolling return is at 30.3%. Invesco India PSU Equities Fund top holdings comprise Power Grid Corporation of India at 8.6%, Bharat Electronics at 8.5% and SBI at 8.4%. The top sectors are engineering at 24.5%, power at 23.2% and crude oil at 16.4%. Fourth is the ICIC Prudential India Opportunities Fund, which aims to invest in opportunities presented by special situations such as corporate restructuring, government policy or regulatory changes, companies going through temporary unique challenges and other similar instances. The fund follows a blend of value and growth style of investing and uses a bottom-up approach to stock picking. It was launched in January 2019 and currently holds an AUM of Rs 271.9 billion. In the last 5 years, the fund has generated returns of 30.1% on a rolling basis. Popular large cap names such as Axis Bank at 7.1%, HDFC Bank at 5.7% and Reliance Industries at 4.9% currently form the fund's top holdings. Among sectors, the fund has higher allocation in banks at 23.2%, healthcare at 10.4% and insurance at 9.7%. Fifth is the Franklin India Opportunities Fund, which invests primarily in companies poised to benefit from initiatives such as Make in India, sustainable living, and digitalization. The fund follows a blend of value and growth style of investing. It takes defensive or aggressive positions depending on the opportunities available at various points in time. The fund was launched in February 2000 and currently has an AUM of Rs 64.9 billion. On a rolling 5 years return, the fund has delivered returns of 29.8%. Its top stock holdings are Reliance Industries 6.6%, HDFC Bank 6.1%, and Hindustan Unilever at 4.1%. Sector-wise, the fund's portfolio is primarily invested in infotech at 13.3%, banks at 12.2%, and healthcare at 10%. Now, coming to the conclusion, thematic funds may generate high returns if the underlying theme performs well over a period. However, not every theme can outperform year after year. Performance across themes may differ depending on factors such as government policies, demand conditions, input prices, etc. Since the investment universe of thematic funds is limited, these funds may witness high downside risk during uncertain market conditions. Thus, thematic funds are high risk, high return investments. They may be suitable only for aggressive investors who understand the risk involved and have a long term investment horizon of at least 5 to 7 years. If you are an aggressive investor, consider restricting the overall allocation in thematic funds to under 15% of the entire equity portfolio. So, if you found this video helpful, don't forget to hit that like button and share it with your fellow investors. For more expert insights on mutual fund investments, be sure to check out our related videos and articles linked below. And if you are new to the channel, hit subscribe and tap the bell icon so you never miss an update on smart investing strategies. Signing off for now, happy investing. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, membership of BASL, and certification from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.